Investment Officer at Birla Sun Life AMC now joins us. He's our market master for the morning. Morning, Mahesh. Thank you very much for joining us. Well, first up, 2016, from the looks of it, is not going to be globally very rewarding. We still see crude down to its knees, and the fact that Yellen is not very aggressively pushing rate hikes next year is an indication that she's seeing a soft world. So how much can our earnings grow if the world is an unkind place?
Yes, so you're right. I mean, as we look forward, even our internal view is that global growth is going to slow down. And while developed markets are one part of it, I think the emerging markets is where actually you will see much slower growth compared to historically. I mean, emerging markets were the key driver of global growth. I mean, we all know about China, okay, where things are slowing down, but also other emerging markets, because of the fall in the commodities, okay, you will see a lot of stress and pressure over there. So on that backdrop, I think, there'll be, I mean, if you look at India, while this year we'll probably grow at the same pace as last year. Next year, I think on the back that the global tailwind would not be there, strong global growth. There are still some of domestic factors, okay, which would start to contribute. I mean, we have seen that this year the government spending has picked up, so that should help to get some of the core sectors picking up. We'll have some stimulus coming in by way of a consumption, okay, the pay commission, which is again a pretty decent quantum. The total amount being talked about is around 3 lakh crores, okay, which will be going to the hands of the state and the central, the 7th pay commission, and that will impact almost like 30 million people. So given all these factors, I think our growth should be slightly better, but given the fact that the global growth is going to be weaker, I think the growth expectations, at least for the GDP, should be slightly more moderate. But when we look at from a bottom-up perspective,
earnings growth, what is the
Yeah, I mean, if you look at from a bottom-up perspective, I think what has happened in this year, we have seen a sharp cut to earnings. So FY16 earnings growth has been now looking at around 7 to 8% kind of a growth. And what went wrong this year are 2 or 3 factors. I mean, we saw that the huge disinflationary impact on the top line growth, which we think will probably not recur next year, because the sharp fall in commodity prices, what we have seen, while we don't expect any sharp recovery over there, it's difficult to assume that they will go down further, looking at that a lot of the prices at these levels are at the marginal cost of production. And we've seen in China, some of the capacities are getting shut. So I think WPI, which was kind of negative last year, our belief is should average at around 2.5%. Okay. So your nominal GDP growth should be at least 3% higher than the real GDP growth. Again, this year we've seen the consumption getting impacted because of back-to-back 2 poor monsoons. And if you roll back next year, the probability of 3 years, okay, back-to-back poor monsoon, at least historically, statistically, is very, very low. In fact, last 100 years never happened. So I think that again should act in our favor. So given all these factors, we are looking at next year growth, if not, should be at least around 15 to 17% in that region, which should be good considering the fact that the global outlook is not going to be very supportive.
Okay. Would you still bet on mid caps this year? Sensex and Nifty are probably mildly in the red year to date or full year. Mid caps, however, have given in some cases very good returns, but even as an index about 10%. Will next year also be the year of the mid cap?
So I think if you look at the mid cap index and if you look at the Nifty, the composition is stark different. If you look at Nifty, if you do analysis, almost 56% of the revenues, okay, or the earnings are linked to the global. Okay. Whereas in the mid cap, if you look at distribution of the company and the index, it's more domestic centric. And that's why we've seen that the mid cap stocks probably have, even forget about the stock outperformance, but from an earnings standpoint have done slightly better than the large cap. Having said that, clearly the mid cap valuations are now significantly trending above their long-term averages. I mean, forget about in absolute terms, but also related to the Nifty, they are at a premium. Okay. So given that, the risk reward in the mid cap sector would probably look much lower. But I think the mid cap, again, it's a larger universe, right? I mean, you've got like 300, 350 potentially investable stocks over there. So there are always opportunities to identify companies which can do better. So the bottom-up story in the mid cap will always continue and probably do better. But as an allocation, if you want us to take a decision at this point in time, one would probably look at larger caps where the valuations are now corrected, and have a right mix of mid cap and large cap in your portfolios to really outperform the market.
So speaking about allocation, this year we've seen some OMCs do well, some particular car makers like Maruti, a few pharmaceutical name consumptions, players like HUL, Asian Paints did well. But on the flip side, you had weakness in many of these big blue chip banking names, commodities sold off. Should a person who's looking to invest, say for 12 to 18 months, make any changes to their portfolio from last year to position themselves for the next year?
Yes, I think the key changes what we are looking at is that obviously, as you mentioned earlier, the global economy is going to be weak. So some of the global plays, I think one has to be a bit careful. But having said that, in India, if you look at the two large sectors which are kind of global dependent, is pharma. Again, pharma has taken a big hit this year because of company-specific issues. Hopefully, they should not recur next year. So you should see growth normalcy over there. So one can, and again, the valuations have corrected over there. So that's a sector which can be looked at favorably going forward.
So you can add to your positions.
Yeah, we can add to the positions over there. Again, oil and gas sector, while it's linked to the global growth, we have seen the refining margins have been pretty strong. We have seen the fall in the crude, the petrochemical prices has led to a slight demand elasticity has come into play, and new capacities is not really coming up in the near term. So that should be a sector, which should show better earnings growth going forward. And obviously the domestic consumer sector, I'm not talking about consumer staples, but consumer discretionary, I think we should see some leg up in the next fiscal year. So that's a sector, again, where I think one should be positively inclined.
Okay. Well, Mahesh, out of time, we will have to leave it at that. But that's a bunch of advice for the coming year, 2016, and hope you have a rewarding year as well.
Sure. Thanks.
Well, we'll have to wrap up Bazaar on that note.